A transaction IND AS 115 is effective for annual reporting periods beginning on or after 1st April 2018. Entities, entities are required to apply the new revenue standard using either of the following two approaches: full retrospective approach, full full retrospective approach, apply retrospectively to each prior period presented in accordance with IND AS 8, subject to some practical expedient mentioned in the standard, or modified retrospective approach, apply retrospectively with the cumulative effect of initial application recognized at the date of initial application. with applying in with applying the full retrospective method, an entity with the applying the full retrospective method, an entity shall restate all prior periods presented in accordance with IND-AS 8. This result in comparative statement in which all periods are presented as if IND-AS 115 had been in effect since the beginning of the earliest period presented. When applying modified retrospective approach, an entity does not restate prior period presented, and the cumulative effect of financial application is recognized in the opening retained earning of the first year of application in the AS 115. As the guidance in IND-AS 115 applies only to contract with the customers, the first step in the model is to identify such contracts. A contract is an agreement between two or more parties that create enforceable right and obligation. Enforceability of the rights and obligation in a contract is a matter of law. Contract can be written, oral, or implied by an entity, a customer, business practices. The practice and process for establishing a contracts with customers vary across legal jurisdiction. Entities, legal jurisdictions, and entities, in addition, they may vary within an entity. For example, they may depend on the basis of customer or the nature of promised goods or services. An entity shall consider those practices and process in determining whether and when an agreement with the create create enforceable rights and obligations. For example, if an entity has an established practices of performance stating performance based on a oral agreement with its customers, it may determine that such oral agreement meet the definition of contract. As a result, an entity may need to account for a contract as soon as performance begins rather than delay revenue recognition until the arrangement is documented in a signed contract. The guidance in IND makes it clear that the rights and obligations in a contract must be enforceable in order for an entity to apply the five steps revenue model. Enforceability is a matter of law, so an entity needs to consider the local relevant legal environment to make that determination. They said while the contract must be legally enforceable, oral or implied promises may give rise to performance obligation in the contract. Criteria Criteria for recognizing a contract. Step 1 serves as a gateway through which an entity must pass before proceeding to the later steps of the model. In other words, if at the inception of an arrangement, an entity concludes that the criteria below are not met, it should not apply step 2, 5 of the model until it determines that the step 1 criteria are subsequently met. When a contract meets the 5 criteria and passes step 1, the entity will not reassess the step 1 criteria unless there is an indication of a significant changes in facts and circumstances. IND-AS, IND-AS 115 requires an entity to account for a contract with the customer that is within the scope of the model in this standard only when all the following criteria are met. The parties have approved, the parties have approved in writing, orally, or in accordance with the other customary business practices. The contracts are committed to perform their contractual obligations. The entity can identify each party rights regarding the goods or services to be transferred. The entity can identify the payment terms for the goods or services to be transferred. The contract has a commercial substance. The risk, timing or amount of the entity future cash flow is expected to change as a result of the contract, and it is a probable that the entity will collect substantially all the considerations to which it expects to be entitled in exchange for the goods or services that will be transferred to the customer. If the arrangement does not meet the five criteria at inception, an accounting contract for the purpose of applying IND-AS 115 does not exist, and the entity should continue to reassess whether the five criteria are subsequently met. For example, if customers' ability to pay the consideration deteriorates significantly, an entity would reassess whether it is a probable that the entity will collect the consideration to which it will be entitled in exchange for the remaining goods or services that will be transferred to the customer. A contract, a contract may not pass step 1, but the entity may still transfer goods or services to the customer and receive a non-refundable consideration in exchange for those goods or services. In that circumstances, the entity cannot recognize revenue for the non-refundable consideration. received until either step 1 criteria are subsequently met or one of the event outlined below has occurred. The entity has no remaining obligation to transfer goods or services to the customer, and all or substantially all of the consideration promised by the customer has been received by the entity and is a non-refundable, or the contract has been terminated and the consideration received from the customer is non-refundable. Indian Accounting Standard 115 consideration consider if the contract meet each of the five criteria past step 1. Have the parties approved the contract? Yes. If no, continue to assess the contract to determine if the step 1 carried or met. Have the parties approved the contract? Yes. Can the entity identify each party's right regarding the goods or services to be transferred? Yes. Can the entity identify the payment terms for the goods or services to be transferred? Yes. Does the contract have a commercial substance? Yes. It is a probable. Is it? Is it probable that the entity will collect substantially all the consideration to which it will be entitled in exchange for goods, for the goods services that will be transferred to the customer, that will be transferred to the customer? Yes. Proceed to step 2 and only reassess the step 1 criteria if there is an indication of a significant change in facts and circumstances. Continue to assess the contract to determine if the step 1 is the step 1 carries, if the step 1 criteria are met. Recognize recognize the consideration, recognize consideration received as a liability until each of the five criteria in step 1 are met or one of the following occurs. Entity has no remaining performance obligations and substantially all the considerations has been received and is non-refundable. Contract 2 is terminated and consideration is non-refundable. Proceed step 2 and only reassess the step 1 criteria if there is an indication of significant change in facts and circumstances. Each of the criteria mentioned above are discussed in more detail below. Criteria 1, the parties have approved the contract and are committed to perform. To pass the step 1, the parties must approve the contract. This approval may this approval may be written, oral or implied, as long as the parties intend to be bound by the terms and conditions of the contract. The form of the contract is oral, written, or implied. It is not determinative in assessing whether the parties have approved the contract. Instead, an entity must consider all relevant facts and circumstances when assessing whether the parties intend to be bound by the terms and conditions of the contract. In some cases, the parties to an oral or implied contract may have the intent to fulfill their respective obligations. However, in other cases, A written contract may be required before an entity can conclude that the parties have approved the arrangement. In addition to approving the contract, the entity must also be able to conclude that both the parties are committed to performing their respective obligation under the contract. This does not mean that parties need to be committed to fulfill all of their respective rights and obligations. In order for this criterion to be met, for example, an entity may include a requirement in a contract for the customer to purchase minimum quantity of goods each month, but the entity may have a history of not enforcing the requirement. In this example, the contract approval criterion can still be satisfied if evidence support that the customer and the entity are both substantially committed to the contract. Termination clauses are also an important consideration when determining whether both parties are committed to perform under a contract. Consequentially, whether contract exists below for further discussion of terminating clauses and how they affect contract duration. The criteria 2, the entity can identify each party's right. An entity must be able to identify its rights as well as the rights of all other parties to the contract. An entity cannot assess the transfer of goods or services if it cannot identify each party rights regarding those goods or services. Criteria 3, the entity can identify the payment terms for the goods or services. An entity must also be able to identify the payment terms for the promised goods or services within the contract. Identifying the payment terms does not require that the consideration price be fixed or stated in the contract with the customer, as long as there is an enforceable right to payment or enforceably as a matter of law, and the contract contains sufficient information to enable the entity to estimate the transaction price. The contract would meet this criterion. The entity cannot determine how much it will receive in exchange for the promised goods or services. The transaction price in step 3 of the model, it cannot identify the contractual payment terms. Criteria 4, the contract has a commercial substance. A contract has a commercial substance if the risk, timing, or amount of the entity cash flows is expected to change as a result of the contract. In other words, the contract must have economic consequences. This criterion was added to prevent the entities from transferring goods or services back and forth to each other little or no consideration to artificial inflate their revenue. This criteria is applicable for both monetary and non-monetary transactions. Because without a commercial substance, it is questionable whether an entity has entered into a transaction that has economic consequences. Determining whether a contract has a commercial substance for the purpose of India's 115 may require significant judgment. In all situations, the entity must be able to demonstrate a substantive business purpose exists, considering the nature of the structure of the transaction. Guys, are you understanding what I'm telling? My dear friend, are you understanding what I'm telling? Are you enjoying what I'm telling? See, what I'm telling you, the NDAS 115 is very important in terms of the financials, because you cannot, or you bring down or bring up the revenue as you want. If it inflates, it affects the stakeholders. So that you need to be represent according to India's 115. India's 115 what says? India's 115 says that the revenue is to be recognized, especially when contract with the customers. It matches, it should match the terms of the conditions of the revenue recognition. It has to be goods and services should be transferred, performance obligations should be completed. In the course of the furtherance of business, it should be happen. All these are the bundle criteria. Then I could recognize revenue. Otherwise, it won't. Now, I would like to talk about a contract as a commercial substance. If the risk, timing, or amount of the entity cash flow is expected to change as a result of the contract. In other words, the contract must have economic consequences. This criteria was added to prevent entities from transferring goods or services back and forth to each other for little or no consideration to artificially inflate their revenue. This criteria is applicable for both monetary and non-monetary transactions because without commercial substance, it is a questionable whether the entity has entered into a transaction that has economic consequences. Determining whether a contract has a commercial substance for the purpose of India's 115 may require significant judgment in all situations. The entity must be able to demonstrate the substantive business purpose to exist, considering the nature and structure of its transaction. The contract has commercial substance. A contract has a commercial substance if the risk of timing or amount or the entity cash flow is expected to change as a result of the contract. In other words, the contract must have economic consequences. This criterion was added to prevent entities from a transferring goods or services back and forth to each other for little or no consideration to artificial inflate their revenue. This criteria is applicable for both monetary non-monetary transactions. Because without commercial substance, it is a questionable whether an entity has entered into a transaction that has economic consequences. Determining whether a contract has a commercial substance for the purpose of India's 115 may require significant judgment. In all situations, the entity must be able to demonstrate that a substantive business purpose exists, considering the nature and structure of its transaction. Understand, my dear friend? Yes, you may understand. Now, the criteria 5. The criteria 5 speaks about it is a probable that the entity will collect substantially all the consideration. To pass the step 1, an entity must determine that it is a probable that it will be collect substantially all the consideration to which the entity to which it will be entitled under the contract in exchange for goods or services that it will transfer to the customer. This criterion is also referred to as the collectability assessment. In determining whether collection is a probable, the entity consider the customer ability and intention to pay consideration. all relevant facts and circumstances, including past experiences with that customer or customer classes in making the determination of the customer ability to pay. The credit risk was an important thing to determine if the contract is valid. However, customer credit risk should not affect the measurement or presentation of the revenue. This standard requires an entity to evaluate the contract inception and when significant facts and circumstances change, whether it is a probable that it will collect consideration to which it will be entitled to in exchange for the goods or services that will be transferred to a customer. For the purpose of this analysis, the meaning of the term probable means more likely than not. If it is not probable that the entity will collect amounts to which it is entitled, the model in India's 115 is not applied to a contract until concerns about collectibility have been resolved. My dear friend, have you understood? Are you okay? Are you feel comfort when I'm talking to you? Yes, somebody liked my video. I'm happy to that. Let's go to discussing deep. See, this is People's Advocate Sreemannarayana Mallela. Mission, vision of Sreemannarayana Mallela is dedicated to stakeholders of law. Here, I would like to draw one example. A new well limited decides to enter a new market that is currently experiencing economic difficulty and expects that in future the economy will improve. The new well limited enter into an arrangement with the customer in the new region offer networking products for promised consideration of 1 crore 2 lakh 50,000. No, 2 lakh 50,000. At contract inception, Newway Limited expects that it may not be able to collect the full amount from the customer. Determine how Newway Limited will recognize this transaction. Assuming that, assuming the contract meets the other criteria covered within the scope of the model in NDAS 115. Newway Limited need to assess whether collection is probable. In making this assessment, Newway Limited considers whether the customer has ability and intent to pay the estimated transaction price, which may be an amount less than the contract price. Assuming that the contract meets the other criteria covered within the scope of the model. In India's 115, a new well limited needs to assess whether collection is probable. In making this assessment, new well limited consider whether the customer has the ability to intend to pay the estimated transaction price, which may be an amount less than the contract price. Next, contract that do not pass step 1, reassessing the step 1 criteria. When an entity determines that a contract passes step 1, it should not reassess contract existence unless there is an indication of a significant change, a significant change in facts and circumstances. For example, If the customer ability to pay significantly deteriorates, an entity would have to reassess whether it is probable that the entity will collect the consideration to which it is entitled in exchange for transferring the remaining goods and services under the contract. The updated assessment is a prospective in nature and would not change the conclusions associated with goods and services already transferred. That the entity that is an entity would not reverse any receivables revenue or contract assets already recognized under the contract. However, the revenue related to the remaining goods or services yet to be transferred is impacted. Contract terms. An entity applies NDAs 115, the contractual period over which the parties of the contract have been presented enforceable rights and obligations. Some contract with the customers may have no fixed duration and can be terminated or modified by either party at any time. Other contracts may automatically renew on a periodic basis that is specified in the contract. An entity shall apply this standard to the duration of the contract, the contractual period in which the parties to the contract have a present enforceable rights and obligations. Termination of the provisions. Termination of the provisions. In termination of the provisions, Shivarama, say hi. What's up? What's up, bro? Shiva Rama. Okay, let's start our discussion. The termination of the provisions. Some contracts can be terminated by either of the party at any time, while others may only be terminated by the one party. The contract does not exist. If such party to a contract has unilateral enforceable right to terminate a wholly unperformed contract without paying a termination penalty. A wholly unperformed contract means that the entity has not yet performed and is not yet entitled to any consideration. In some situation, only the customer has the ability to terminate the contract without penalty. In those situations, the contract terms accounting purpose may be shorter than the stated in the contract. Okay, friend. Fine. Shiva Ram. You're fine, bro. Okay. Shivaram, are you a student, bro? Or general public? Are you a student or general public? However, a substantive termination penalty payable by a customer to the entity is evidence of enforceable rights and obligations of both parties throughout the period covered by the termination penalty. For example, consider a 4-year service contract in which the customer has the right to cancel without cash at the end of each year, but for which the customer would incur termination penalty that decreases each year and is determined to be substantive, then this arrangement would be treated as a 4-year contract only, and contract term should not be assessed less than 4 years unless the entity has a past experience of having such contract terminated by this customer or class of customers, which may be demand assessment of the contract terms based on the previous trend experience. Understood, guys? Understood, my advocate brothers? You will definitely understand. I know that. Now time is 2:20. It's time to go have lunch and come back. Yes, I'm planned for lunch. Uh, I'll take lunch break, and I would like to come by 3 o'clock or 3:30 like that. Not 3:30. 2:20 means 40 minutes hardly. I'll come back by 3 o'clock. We'll start the other backlogs of standards, either maybe theory or practical problems. We need to do lot of problems that will be do by afternoon, my friends. Time is running. Ayyo, time is running like anything. Oh God, I need to compete with the time. We need to compete with the time. For example, a gymnasium entered into a contract with a new member provide access to its gum for 12-month period at 4,500 rupees per month. The member can cancel his or membership without penalty after 3 months. Specified the contract. In this case, the enforceable rights and obligations of this contract are for 3 months, and therefore the contract term is 3 months. Dear friends, now time is 2:22. I'll go. I would like to go back to lunch and come back by exactly 3 o'clock. I would like to start this rest of the Indias and other Indias. That's what our goal. Thank you guys who are watching my YouTube channel. I'm grateful to you. Thank you. Bye bye. See you. Tata.